and welcome to the Contrarian Trader. This is Robert Desmond. It is Saturday, October the 17th, 2009. Folks, this week, I know you're wondering why is he laughing? I can't even get the sentence out. The Dow Jones Industrial Average recaptured the 10,000 level for about the 22nd time since 1999. But to watch CNBC, you'd think that this was the first time ever. They had hats printed up. They had balloons going off. They had people down on the floor talking about what an event this is. To me, all we ran into was resistance. And by week's end, it showed that 10,000 is resistance because it failed to close above that level. S&P 500 didn't quite make the 1100 mark, but it did hit 1096. I wouldn't be a bit surprised. We closed off of our lows on Friday. Wouldn't be a bit surprised to see another try at that 1100 level. I doubt we're going to be able to hold that level. I've been proven wrong at the 1050 level. You cannot emphasize how crooked and how rigged this market is at this time. Why do I say that? Well, first, the 10,000 party that was held on CNBC, I didn't get my invitation. I just watched it from afar. It was an absolute joke. They should be ashamed and embarrassed that they try to excite the small investor that probably wasn't around back in 1999, or the new investor that doesn't remember that we were 10,000 just a year ago. It's just astonishing. Since 1999, the first time that we hit 10,000, do you know that we are down? If you did that buy and hold game, you would have an inflation-adjusted loss over the past 10 years. Do the math. That's the truth. But they'll never say that on CNBC. Let's take a look at the earnings, the fantastic earnings that came out last week on J.P. Morgan, Intel, all of them. All you kept hearing since Alcoa announced earnings the week before, which I spoke about in last week's commentary, they all hit the cover off the ball. And I said, don't buy into this rally. It's all a sham. This is cost-cutting rallies, cost-cutting earnings. And Alcoa's earnings, they did show some revenue increases. Don't forget, cash for clunkers, that was around. That money's gone now. That's not going to be seen in this coming quarter. Let's see if they can repeat this. Where does Alcoa trade? At the end of earnings, this is the day following earnings, they had a high of 15.11. Do you know that Alcoa is now below where they announced earnings? What happened to? I thought earnings was so great. Now they're lower. It looks like Alcoa is rolling over. Look at the relative strength line. You have a negative divergence. When a stock heads higher and the RSI heads lower, that means that you have the strength, the money, the big money, the volume that was going into that stock or in that index is now leaving. So these are all small investors. This is all short covering. Whenever you see these pops day after day on light volume, with the exception of this one day here, which was almost a key reversal. This is a sell indicator if I ever saw one. Whenever you see that, you need to put your antenna up and say, wow, the market is getting rigged. So you need to be able to take it for what it is. You had that spike at 15.11, get out. Take your profits and get out. This AA is probably going to break support here at 14. It's probably going to head down to the 50-day moving average. Let's see if we can get support there. J.P. Morgan. J.P. Morgan had no true earnings. If you backed out to J.P. Morgan, you just had Chase, you would have had a break even at best to a loss at worst. What made money was J.P. Morgan. The trading, they took the money that the government had given them months ago, they lent it out to the Federal Reserve, and they're being paid back interest on that money. They're also spiking their own stock. They're buying their own stock because they know as go the banks, so goes the rest of the stock market. So don't buy into this hoax that you see as J.P. Morgan hitting the cover off the ball and making record earnings. It's an absolute sham. They lost $700 million on their credit card receivables alone. They lost $700 million in credit cards. And this is hitting the cover off the ball. If it wasn't for their trading division, they would have break-even earnings, or they would have lost money. It's a joke. It's a sin. Intel. Another cost-cutting story here. Look at Intel. They traded at the day of their earnings. They traded as high as 21.27. Another, just like AA, key reversal. Now they're way below where they were, where they reported earnings at. What happened? I thought they hit the cover off the ball. Shouldn't they have spiked and proceeded higher? To listen to CNBC, the stock should be at $25, $30 a share. You do have some support here at 20. I wouldn't be a bit surprised for it to try to rally back. My bet, you're going to see this market roll over. Why? Let's take a look at the Dow Jones Industrial Average. Okay, we had the Dow Jones Industrial Average hit 10,000, failed to close above it. What do you need for the Dow Industrial Average to proceed higher? Well, you need the banks and you need the transports. What was missing last week? The transports failed to make a new high. The previous high was 40.55. The high last week was at 40.52. Let's take another picture of the Dow. Here's the previous high here at 9,800. It made a new record high, or yearly high, of 10,062. There's a divergence there. You need these transports. Watch out for these transports. What else was missing? Granted, you had the financials, which proceeded to make a new high, but they couldn't hold it. So you have to question the ability of this market to continue higher. Also, when you take a look at the rally in the financials here, you have to take a look at the RSI. You have relative strength that's not there. You need to see, as these, I mentioned this last week as well, as you see the financials head higher, you want to see the RSI head higher. You want to see volume bars head higher. You're not seeing that. Let's take a look at the volume bars. This is the XLF. You're seeing volume leaving here. So you have this 1 day above volume, above average volume, but it didn't mean much. Okay, you had sellers come in. Friday was another selling day on the back of the Citigroup earnings and on the back of Bank of America earnings, and of course the J.P. Morgan earnings, which were false earnings. Okay, don't let them get you excited about this. I get so upset with what's being reported out there. It just blows my mind. Let's take a look at a couple of the stocks that we're watching. We added NCL last week. I mentioned it last week as a watch. We added only a small position on this. You may see this head higher, and we'll buy into, short into it on strength. Okay, this here is an indicator of there's some confusion on the part of shorts and longs. Which way to head here? If it does head higher, we'll add more. If it heads lower, we're already short, so we'll make a profit anyway. Fold, F-O-L-D. I mentioned to my subscribers, watch out for this. Okay, don't jump in on this. I sent out an alert to watch. Don't act, because you're seeing the 50-day moving average come into the 200-day moving average. That's a bearish indicator, and you're going to see sellers come in. And sure enough, they did. This is going to be a buy really, really soon. Wait for the alert, okay? Please don't jump in on this just yet. We're close, not that close. Let's take a look at Drive, DRIV. I sent out a great options trade for my subscribers on Friday. If they're interested, this is for option writers, those who like to write naked puts. Yes, there are naked puts you could write. I can tell you how to do that as well. Or you can do it uncovered as well. You can do it covered as well. If you're interested, shoot me an email. I'll tell you how to do it. But look, we're going to probably test the 24 level on here. We'd like to see it hold that level. If we hold it, that might be the area to jump in. But please, Friday was a very bearish day. I sent out an alert to get ready to jump in on this one. It wasn't the time yet. It's still not time. You're going to still see some downside on DRIV. We want to get long it soon. Wait for the alert, okay? And be careful if you're on margin. I think that's pretty much it this week, folks. Okay. Oh, the VIX. Take a look at the VIX. Get ready. It's finding support here at that 20 level. If it breaks below it, it means you're probably going to see a really solid run higher on this market. That's the time to start shorting, okay? Because there's too much complacency in this market, right? For those who are not members of the Contrarian Trader, I've shown you trades that have made you money, or would have made you money if you were a subscriber. You would have received our alerts. PZA, we shorted back here When everybody else is saying buy, 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 okay, it's going to go to the moon. We were saying short. That's our profit so far. We wrote it all the way down here. So please take advantage of our 14-day free trial offer. If you have any questions, please visit the Contrarian Trader. Drop me an email, bob@contrariantrader.com. I'll talk to you soon, and good luck in this coming trading week, okay? Bye-bye.